everybody. Welcome to Brande's annual free tax seminar. Due to circumstances, we're doing everything online these days. So welcome to Zoom. And this is my first time doing this kind of thing in a webinar setting like this. Usually I do my free seminars once a year in Arizona and once a year in Louisiana. And so if you don't do those shows, you've likely never been to one of these. So yay for technology. And I guess that's one of the pros of what we're all going through right now is we can do things like this. So thanks for joining us. Just a little reminder to everybody, if you're not talking, asking a question, whatever, make sure to mute yourself. If you are using a laptop or a cell phone or something, should be in your bottom left corner, the mute and unmute. So find that mute button, go ahead and mute yourselves now. Don't forget to unmute if you start talking and nobody is responding to you. It's probably because you're still muted. So make sure you're familiar with that. And you can show video, no video, whatever you want to do. If you need to get up and leave the room, you can turn your video off. Nobody will ever know that you've left. So whatever you would like to do for that. I want to thank Life's a Faire, first of all, for hosting this webinar, and also RCEAF and the Advocacy program for helping to make all this happen. So thanks for doing all of this. Yay, air claps, I see you. So thanks for all of that. If you guys aren't familiar with Life's a Faire or RCEAF, both organizations are doing a whole lot in the community to help get artists online and things like that. So we've got a lot going on that we're doing kind of hand in hand with Life's a Faire. So it's been a wonderful collaboration so far. So we're going to do a lot of topics. There's a lot to go through with the changes and stuff like that. I'm going to try to explain everything as best as I can. There are a couple of functions that you can do in here. First of all, there's a chat. If you click the chat window, you can chat, you can ask questions right in the chat window, and then before I change topics, I'll address those. If you want to do your question live, you can raise your hand. There's a raise hand. Where the heck did that raise hand thing go? Is that in Meet? Is the raise hand thing in Meet? Did I say it wrong? There it is, it's in raise hand. If you go into reactions, you guys, you can, one of the options is to raise your hand. So if you have a question, you can raise your hand too. And hopefully I'll see that. Lee, I only see like a handful of people on my screen. So if I'm not calling on somebody and they have their hand raised, let me know, okay? And then there's also reactions in here. So you can thumbs up or clap or laugh with crying emoji, whatever emotions you're feeling. And thank God there's not like a vomit emoji ever, so that's great. There's no sad cry face emoji, so the closest you can get to is like a oh my God face. But all that's available to you, so you can use that as you need to. If I'm going too fast, you need me to back up or anything like that, feel free to stop and tell me, you know, back up, say that again, say that differently, it didn't quite soak in, you know, anything like that. So just let me know what you need. Before we change topics, I'm going to ask if anybody has questions, and then I'm going to go through the chat and look at the questions. So just make sure that like your question is on topic, because we may be about to talk about what your question is. And then when we get to the end, if we didn't address what your specific question is, you can certainly let me know. We'll open up the floor to any sort of questions that there are. And if you know, like I said, we're going to be recording this, we're going to be rebroadcasting this. If your question is too sensitive, too personal, too borderline, you don't want the world to hear your question, see your face, whatever, I'm going to put my contact information up here on the screen right now so that everybody knows how to reach me. So you can write all this down. You can PM me on Facebook. You can email me at brandeswatson@gmail.com. Don't forget that middle initial S, otherwise it goes to some random other Brandy who spells her name with an E. I don't know who that person is. You can text me. You can certainly call me. But, you know, not knowing what time zones people are on, I think that texting and PMing and emailing are definitely the best way to go. Most of you already communicate with me during one of these kind of things, so I think we're pretty good to go on that. But if you have a sensitive question, just send me a message afterward. It doesn't have to be during this, okay? Everybody get this contact info? Good to go? All right, back to my face. Does anybody have any questions or anything before we get started on how the functionality of this or anything like that? Okay, wonderful. We're gonna get started then. All right, so just a little bit about me if you guys don't know who I am. I know most of your faces, but I have been on the road full-time for 23 years. I've been the manager of Uncommon Adornments for that entire time. More recently, I'm the co-owner of our new business, which is Celtic Leatherworks. I am also the founder and president of the RCEAF nonprofit. For those of you who don't know what that is, that's the Renaissance Catastrophic Emergency Assistance Foundation. A mouthful, I understand, RCEAF. So we were founded, a couple weeks after the shutdown in March last year. I was a RESCU board member for about 6 years and head of the advocacy program for RESCU. So I had a little bit of experience in nonprofit world and especially in helping our community. So when all this happened, I guess it was deemed time to start a new nonprofit. So here we are. So we're trying to do lots of advocacy work to get information like this out to the community so we can kind of take the stigma off of taxes being so scary for everybody. I'm aware that they're super scary. This is why I do these free seminars every year. I feel like knowledge is power, and the more you know about something, the less scary it becomes. I've also, in addition to everything I just said about being on the road, I've been a registered tax preparer for more than 15 years now. Last year I did over 200 tax returns, mostly Ren Fest Community Members. I do taxes for individuals, families, business owners, independent contractors, artists, entertainers, retirees, first-time taxpayers, people who haven't done taxes in their entire lives, all of those things. I am registered with the IRS and I have a PTIN number. So I do all of those things all together. I started doing taxes for other people pro bono when I saw that there was a need in the community for people who were going through medical situations where they didn't have any sort of proof of income. And if they only had some sort of proof of income to show that they can't pay for that $400,000 hospital bill, that they would be able to get that bill wiped clean completely. So I started doing taxes for other people for that purpose, because that long ago, a lot of people were still solely cash under the table, no proof of income whatsoever. And that was problem enough back then. I think in the current climate that we're all in, we can all agree that we have learned this year more than any how important it is to have a tax return. As soon as everybody saw that these stimuluses were coming from being a taxpayer and having submitted a tax return, all of a sudden my phone was just lighting up like crazy from people who never saw a benefit to doing their taxes. So I think all in all, it's turned into kind of be a good thing to get the community doing their taxes the way they should be. So I think this has been kind of a nice lesson for everybody to get right with the world. So that's why I've kind of started to do all this and started to do these seminars. And I think that we'll continue to do them online as well as in person once in person can exist again. So thanks for being here for all of that. Now I want to know a little bit about you guys. So we're going to do a couple of short polls on your screen. If you have phoned in, you're not going to be able to see this, so just hang on with us for a little bit. But you're going to see some polls coming up on your screen, 2 short polls. The first thing that we're going to ask you, and you should be able just to click your screen and answer these things and hit submit. The first thing that we're going to ask you is going to be what you are. Are you a business owner? Are you a worker for cash or 1099s? Are you an employee, or are you all of the above, like a lot of us? So if you'll go ahead and click in and answer those things, helps me understand who I'm talking to. And then the next poll is going to be, why are you here? You can select as many of these as fit for your purposes. Once again, so we can see why everybody's here. This is all anonymous, by the way. All we're going to see is a percentage and amount of people that have answered in some way. So be honest about the terror of why you're here or whatever. So go ahead, we're gonna leave this poll open for just a few more seconds. If you would like to get in there, I'm gonna get a sip of my beverage before we move on. I have a cat who is going to participate in the call soon. Oh, hi. Okay, you just shook the whole table. That's fine. She's put on a little pandemic weight, so she shakes the table a little more these days. She has mommy and daddy sympathy pandemic weight. All right, cool. Get to those questions and we're going to end this polling here in just a second. I'm going to give it 5 more seconds, then we can end the polling. Awesome. And then we'll share the results with everybody so you can all kind of see who we're surrounded with. All right, so ending polling, sharing results. All right, so 60% of us here are business owners. Got a couple of employees in here and a handful of all of the aboves. I'm a little surprised that we don't have any cash or 1099 people in here, but I guess that encompasses some of the all of the above. Okay, all right, great. Why are we here? Mostly for overall tax knowledge. Way to go, people who love information. Learn to do your own taxes. Better organized for my tax preparers. Most of you people, fabulous. New to the tax situation, no clue, perfectly acceptable. Way behind, need to get caught up, understandable. To try to not be scared of taxes, that's almost half. So, understandable. Okay, cool. Well, that tells me a whole lot about you guys, so thank you so much for that. All right, awesome. So, let's just jump right in and start talking about some of these changes for this year. We have, oh, let me show you real quick. Hold on, I knew there was a thing. Nope, not that one, this one. I'm new with slides, so give me a second. This is a thing right here. And then I'm gonna share my screen. If I talk out loud, like it'll work. Cool, can you guys see this? Okay, so we're on week 1. We're doing a 4-part series. Like I said, so every Wednesday we're going to be doing this with a new topic. This week we're on the pandemic bullshit that we should all know about, because let's be real, that's what it is. We're going to be talking about all of these things on this list and then some probably. So if you see the thing you're most interested in on this list, you know you're golden. If not, jot down your question. We'll get into it a little bit later, okay? But these are all of the things that the 2 bills that passed since the pandemic started have really changed. All right, so first things first, we had 2 bills that have passed since the pandemic that changed everything. The CARES Act of March 29th, 2020, and then the one that just went through, the Consolidated Appropriations Act of December 27th, 2020. We're aware that there's an inevitable 3rd bill that's coming. That is definitely going to affect our 2021 tax returns. So we'll probably have a revisit of something like this down the line a little bit so we can kind of address new changes as well. There are tax changes every year, but sometimes something major like this comes along and changes like all the things. So we'll be talking a little bit about 2021 in preparation as well. If I don't know the answer to something, I'm going to tell you I don't know the answer. Sometimes it takes some more research because things have changed and I don't want to give you the wrong answer, but also sometimes things are up in the air. There's a lot of stuff with this new bill that's up in the air that if they pass it might change some stuff, but until they pass it, it's not even worth like considering getting hopes up and stuff. So, all right, so first things first, the tax deadline is back to normal. It is April 15th. For most individual payers, if you're a partnership or something like that, those deadlines are different. But for most of us on this call, that's going to be April 15th. With the pandemic last year, they extended the deadline to July 15th. And I've seen a lot of people talking about taxes being due in July. That is not true, you guys. Your taxes are due April 15th again. And just a reminder, if you do an extension to October 15th, which you still can do, that's an extension to file. That is not an extension to pay. If you do an extension and you owe a bunch of money, you're supposed to pay with filing your tax return, not later. You can pay later, but just remember you could accrue, you know, fees and penalties and things like that. So keep that in mind. But April 15th, we're back to having that date in our brains. Hey, Lindsay, welcome. All right, so Schedule A. Schedule A was like completely gutted and turned upside down with the tax changes from 2018. That they remember back when they wanted to like reduce and eliminate itemized deductions, and like everybody would be able to do their tax return on a postcard. Like, remember that whole thing? That was hysterical. So this year with all these new bills, they've added even more things back in. They've beefed up Schedule A again. So it's like going the opposite of that way. None of us were ever going to be able to do our taxes on a postcard to begin with. But what they've done with Schedule A is where you do your personal deductions, so not your business deductions. That's going to be where you get mortgage interest deductions, where you record charitable gifts, medical stuff. They've put casualty losses back in there, and that's where your property taxes are. So those are kind of your personal deductions, as they call them. You itemize your personal deductions on a Schedule A, and if your Schedule A with all of the categories that I just talked about does not add up to be more than the standard deduction, then you don't get to take any of those deductions. Since in 2018, they raised our standard deduction, it's made it, they said it would be so that it'd be simpler and everybody could just take the standard deduction and whatever, but what it did is eliminate a lot of the possible deductions that everybody had. So it was kind of not the best thing for a lot of people. The other thing that got cut off of that is unreimbursed employee job expenses. With my company, with Uncommon Adornments, we are W-2'd. So it used to be before 2018 that I could take all of the same deductions that you guys can take on your Schedule C, which is where your business deductions come from. I have the same deductions that you guys have, traveling for a living and paying for all of these different things and how we make a living. But in 2018, they changed the law and said that people's jobs should be paying for all those expenses, I guess is how they look at it. And therefore, I am no longer allowed to take any of the same deductions that everybody else can take on their Schedule Cs. Even though they changed all the stuff on Schedule A, that still, they didn't add that back in. So if you get a W-2, you still are not able to write off all those expenses. Now, a lot of us are, as they call, mixed income earners. So we get W-2s, we get 1099s, we own our own business. My tax return is everything I just said. So I have W-2s, I have 1099s, I own my own business. It's all on the same tax return. So that's where you have to start understanding that some of these expenses are not only your W-2 expenses, but they're also your business expenses, and have to start learning how to allocate, which is a important word in taxes, is allocating it over to the right income. So now I just have to be a little smarter about making sure that my business is paying for this, not Brande the employee. So it's all about kind of forward thinking about that. Yes, Lindsay, I see your question in the chat, and I was thinking about you specifically last night. So we'll talk about this after this call about that for sure. Oh yeah, somebody says it's a room full of Ravenclaws. Absolutely true. All the people wanting all the knowledge. Totally right. Love it. Okay. Let me get back and just want to make sure. So the new bill did bring back some of the personal expenses to Schedule C. We were just talking about the casualty losses. So basically what they've brought back, casualty losses were gone unless the president declared your specific disaster a national disaster. Didn't matter if your governor did or anything like that, but claiming it on your 1040 on your main tax form could only be claimed if it was a national disaster declared by the president. They've brought in casualty losses back again. That is not the stipulation. It does not have to be declared a national disaster. It also does backdate. Yes, ma'am. That's your question. It does backdate. The only stipulation is you can claim losses that were over $5,000 that were not covered by insurance. So apply that to your situation. If you have a situation where you can do a carryback basically to a previous tax year, because that does apply to you, that's going to take amending your taxes, but easy enough to do. So keep that in mind. Do the math, see if that fits for any of your previous, I want to say it's 3 tax years that you can go back. Medical has changed back to 7.5% of your AGI instead of 10%, and that percentage is now permanent. What that means is that on that Schedule A, again, this is where you write off your medical, 7.5% of your medical, I'm sorry, let's try this again. 7.5% of your adjusted gross income or your AGI on your tax return, 7.5% of that, once you reach above 7.5%, I'm not saying that right. Once you reach above 7.5% in your medical deduction, you now get the deduction. So if your medical versus your adjusted gross income is only 5% of your adjusted gross, you don't get that deduction. It's only above 7.5%. They had changed it to 10% in the 2018 tax law, but now it's back to 7.5. So if you're generally a healthy person and you only have 1% of your AGI is your medical, then you're not going to get that deduction. The only difference is if all your stuff combined on Schedule A equals more than your standard deduction, then you may end up getting a smaller portion of some of these other deductions. But medical needs to be 7.5% or it's not deductible. Lindsay has her hand up. Yes, ma'am.
Quick question on the medical side. What all is included in medical deduction? Is it only visits? Can we count prescriptions? Can we count medical devices? Like my husband has a CPAP machine. Can we count any expenditure for that?
100%. Anything that doesn't get that's out of pocket, that doesn't get reimbursed by your insurance company, that's all deductible. You can even take medical miles if you're getting repeated treatments to places over and over, but durable equipment, absolutely. Prescriptions, heck yes. If you're being reimbursed by insurance, you can't deduct any of that stuff, but all of your out-of-pocket stuff, absolutely. Your monthly premiums.
So monthly premiums too, because I'm paying $800 out of pocket for my monthly premiums.
Oh, yes, ma'am.
Oh, fabulous. Okay.
Anything out of pocket, absolutely.
And does that include dental too and vision?
Mm-hmm.
Okay. I know what I can send you now.
I was going to say, you'll see that on my form. Yes. Okay. Somebody has asked in here, orthodontics. Absolutely. Yes. That's all medical for sure. What is the standard deduction? It just went up from $12,400 for a single to like $12,510. Like it's very little. So it's changed a little bit. But don't forget your business itemized deductions are different than your personal. So like for me, I don't have a mortgage. I have charitable donations, obviously. I have very little medical. So I don't usually get to write off anything on my Schedule A. So it's all about, for that portion, I end up getting the standard deduction, and then I get the itemized for my business. Diabetic supplies like glucose tablets, heck yeah. Anything that's out of pocket that's medical related. Contact solution, contact lenses, I don't care, all that stuff. Absolutely. The only thing that's you definitely want to be careful of is like your gym membership is probably not medical. So unless it's ordered as PT post-surgery or something like that, like you just be careful about stuff like that, but everything else, absolutely. Let's see, this is only what you've been able to pay on a medical bill. Right. So they're saying this question was, this isn't the total medical bill that you were billed, but what you got paid on. This is a really good rule of thumb for all expenses ever in your life. You get to deduct when you paid it, not when it was billed to you. If you paid booth fees for 2021 in 2020, you don't write those off in 2021. You write them off in 2020 when they were paid. So that's a good rule of thumb for everything. It's all about that date on the receipt. Okay. Last little bits about Schedule A, and then I'm going to ask you guys if you have any more questions on this one. The next thing is charitable expenses. When they gutted the Schedule A in 2018, it hurt a lot of charities because it now meant that a single person had to have $12,400 in charitable expenses in order to be able to deduct them to get to be more than the standard deduction. If you're like me, you don't have a house, you don't have a mortgage, you don't have medical, you don't have all this stuff, my charitable donations are now out of the goodness of my heart because they're not deductible. Okay, they're not going to count. They're not going to lower my tax burden. So that was kind of a hard pill to swallow for a lot of nonprofits. They have brought back a special exception in this new bill because of the pandemic, and a lot of charities took a hard hit during this pandemic, which is why I don't know if you guys know, but all these loans and grants that came out, charities were also able to apply for them. The reason, what they did is in this new bill that was just passed on December 27th, they actually gave everybody a $300 above the line, as they call it, charitable donation. So even if all the rest of your Schedule A, like me, doesn't equate to be anything, up to $300 of my charitable donations will be dollar for dollar, lowering my tax burden. So that's new for the 2020 tax season. And let's not forget it's 2021 right now, but we're currently discussing the 2020 tax season. So everything we're talking about is for 2020. So that does backdate, even though they just passed it, December 27th, that goes backwards to the 2020 tax return. So that's really good. I took charitable donations off of my sheet last year for a lot of people because it wasn't even necessary, because no one could get that deduction unless they had a mortgage or something like that. But I put it right back on this year thanks to this new bill. So that's fantastic. So that, let's see, that's the extent of the changes to Schedule A. Does anybody have any questions or comments on anything specifically about A or anything else we've talked about thus far before I change subjects? All right. Are you raising your hand, Brent, or are you just waving?
Sure.
Okay.
Just quickly, so I do my taxes been doing it through TurboTax generally, and I'm not entirely sure where my question's going to apply. So it's going to be over equipment depreciation. So I don't know.
We're totally getting there.
When we get there, just let me know. And
Business equipment?
Yeah.
Business equipment?
Yeah, I have the scooter rentals, rent the mobility scooters, and I have them on a depreciation schedule. And I just want to know what's going to happen for 2020 when I didn't use them.
Right. They're going to continue to depreciate is the quick answer to that. Depending on when you purchase the things, if they were purchased in previous years, you probably selected, or TurboTax selected for you based on what kind of equipment it is, how many years it's going to depreciate over.
Yeah.
There's some depreciation that depreciates the same amount of money across 5 years. So it's
That's what I got.
Even.
Yeah.
Okay. So it's going to continue to depreciate no matter if that business earned money, or not. That continues to depreciate. Even if you didn't earn any money in that business in 2020 because of all this, but you bought new equipment, they still depreciate. They're still going to enter into that schedule. And what I think we're all going to see, excuse me, cat problems. What are you doing? Get down. Okay. I made a mistake of having something with a feather on it nearby. That was poor planning. So what we're all going to be seeing, I think, is a lack of income in 2020, but still existing expenses. And even if you didn't really buy a whole lot of stuff in 2020 because you didn't have the income to do it, our things from previous years, our assets are still going to continue to depreciate. So a lot of us are going to see our businesses in the negative for 2020.
Right.
And we're going to talk a little bit later about carry forwards and carry backwards of negatives and things like that. But yeah, to answer your question, they just keep depreciating.
Okay. Thank you.
Cool. Anybody else have questions on any of this before we move on to the next topic? Okay. I'm just looking through real quick to see if I see any raised hands. I do not. Okay. So moving on to the next topic then. Some more kind of quick things to offload to you. If I go too fast, slow me down. There's something called a gift tax. That can be a gift to an individual, a family member, a spouse, a business partner, what have you. They've changed the gift tax to $15,000 for an annual gift. So now there's no gift tax to be considered unless that gift is $15,000 across a year. So that's new. It was something like $11,000. So they've upped that quite a bit during the pandemic. If any of you were lucky enough to get a $20,000 gift this year, then yay you. The next thing is cryptocurrencies. For the first time ever in 2020, cryptocurrency is a taxable income now. This is going to be handled just like IRAs, 401ks, all that other stuff. If you sell, if you trade, all of those things need to be tracked as income. Is there anybody on here who has cryptocurrency? Anybody dealing in any of that stuff? I'm looking through everybody.
I bought some this year.
Yep. Okay. I'm seeing somebody in the chat. Somebody says they got some. Okay. So yeah, just know that cryptocurrency is now taxable. It's going to be taxable when you have gains, when you trade, when you sell, when you, et cetera. If you're just buying it and holding it, that's not really something necessarily to worry about. But what they're going to ask you at the end of the tax year is what your estimated value is, what the fair market value is. Whoever you're trading through should definitely have some tutorials for you, things of that sort. I think going forward, we're going to start to see cryptocurrencies being reported on the same type forms that we get now for our other investments, like 1099 INTs, 1099 DIVs. Right now, they haven't required that of the cryptocurrencies, but I'm pretty sure that's coming. So do yourselves a favor, keep track of your cryptocurrencies. There's a lot of stuff out there, people talking about how to handle that on your tax return. So Google it and start figuring that stuff out before it gets too involved. Like a stock, mostly, Louis is saying, tax on sold and gains and losses, right? What about if it does not leave your broker and get reinvested? At the moment, the only thing they're talking about for cryptocurrencies is fair market value and distributions or gains. I suspect that it's going to kind of be like investing in stocks where you're going to get a tax write-off for contributions and stuff in the future. Right now, it doesn't appear to be like that. And we're certainly not getting forms for them or anything. And quite frankly, I think a lot of people aren't going to be reporting that. But I just want to mention to everybody that paperwork is going to be coming. So people may be able to hide it more in their 2020 tax return, but don't let that come back to bite you, because on your 2020 tax return, if you end up getting a form for it that says when you bought all these things and then you didn't report it, now you're gonna have a little bit of trouble. We can talk a little bit more about crypto and stuff, off beside this. I think most people are only now even realizing what it is or anything. So I'm not gonna spend too much time on that, but you can PM me about crypto coming up soon. And oh, hey, thanks, Louie. Okay, where did I go? I've maximized my screen. Allow me to get out of this screen. Exit full screen. Found it. Okay, so, all right, so moving past that, into what we were talking about a second ago with the CARES Act back in March. They went ahead and changed the carryback losses for 2020 to the past 5 years. So what that basically means is you can now, carrybacks were done away with. I think that was in the 2018. Also, if your business is in a negative, you can carry forward your negative to basically give you a write-off next year. They eliminated carrybacks. And basically what a carryback means is in 2020, let's just say as a guess, your business was in the negative for 2020. You can actually take your negative and you can carry it back to anywhere in the last 5 years. If you had a big, massive where you owed a lot of taxes to the government, you had a big year and you paid them $5,000, I don't know, whatever your big year is, you can take 2020's loss and carry back to offset that. What that means is two things. A, you're going to have to amend your tax return to show the carryback. There's a special form for that. B, that will end up eventually giving a refund on that previous tax year back to you if you already paid the IRS what they owed you. Is that going to take some time? For sure. All amended tax returns do take some time to process. They're most definitely, I just don't feel like that's the top of the pile. for processing. So it's going to take some time, but if it means the difference in a few $1,000s in a time where we're all unemployed for the most part, then heck yeah, it's worth paying a tax preparer, you know, $100 to do an amendment. Amendments are really not hard, so they don't take a lot of time. So don't be afraid to ask somebody to do that for you. If you do something like a TurboTax, which by the way, I use TurboTax for ages, so I'm all for the TurboTax. I don't know how much they charge you to do an amendment, but I know you can do that if you do your own taxes. You may have to print them and mail them and stuff like that, so it's a little bit more of a pain in the butt. But it's possible to do. So it's worth, when you get to your 2020 tax return, look back over the last 5 years and find out how much you paid, and if it's worth going to amend 1, 2, 4 tax years. Who knows? I have a lot of clients that I'll be talking to about amending past returns after I do their 2020 for sure. Does anybody have any questions on that topic or anything else that I've talked about thus far? Brent says he has to pay extra for TurboTax accountant if you have to amend. Okay, good information.
Question. Oh gosh, I just lost it. Dang it.
It's all right. You come back, girl. That happens to me all the time.
Got it. So like, I guess I have a huge fear of being audited. Like, that's just, oh my God, like, what if I get audited? Does that add any kind of a flag? Does that?
Only if they think that you're amending something because of something fraudulent or illegal or something to that effect. If you're amending because you, the IRS, changed the tax law to benefit me better and I have to amend to get it, then no, like that's normal. Everybody's gonna be doing that. And it's not, I mean, it's not an irrational fear. Nobody on this call wants to be audited by the IRS, you know, so we're all concerned about that. So this is a good question to have, but especially if it's a tax law change that allows you to go amend a tax return, you are not, that is not an audit flag. They did that for your benefit.
Thank you.
Yeah. So yes, Adrielle, carry back is back. Yes, loving it too. Okay, anybody else with questions on that topic before we move on? Yes, Brent.
I'm concerned about having a big negative this year. One of my biggest concerns, which I may need to talk to you about, you know, afterwards or another time, but you know, in Texas, you know, we've got the Medicaid, the hole. And so I'm concerned about my income dropping, you know, below, I think it's 24.4, you know. I mean, it's been, you know, I mean, I've been on unemployment, which has got me around 20,000, I think. But I mean, you know, I'm embarrassed to say what a bad year it's been. But, you know, I'm real worried about that. You know, if I can carry the negative forward, then maybe I can avoid that. Is that right?
It's so here's the thing. So if you have any sort of medical insurance for 2021, which we're on right now, they're currently going off your 2019 tax return, which is and like a guess of your income for 2021. I just went through this myself. I'm like, I'm self-employed and I'm unemployed. Like, I don't know how you want me to guess at my 2021, for God's sake. Like, I don't have a crystal ball, you know, but so you guess at it. And what happens is once you do your 2020 tax return, then you have to go report a life change if you're on the ACA or if you're on Medicaid or something like that, to tell them, hey, so I didn't foresee this pandemic coming, so I did not guess properly. What I am seeing is I am seeing some people who are getting a penalty on their tax return because of overpayment. So if you're on the ACA, they give you a subsidy. It's based on your old 2019 tax return. So if you didn't get it right, and then on 2020, you made more money, then they're going to give you this penalty. Now, I know that I'm seeing people who are getting a couple $100 tax penalties. Adjusted one the other day that had like a $600 tax penalty. But here's the thing, it's being offset by things like the stimulus, your business being in the negative, things like that on your tax return. I don't want you to freak out about the possibility of getting a penalty from overpayment of a subsidy. It's more about getting kicked off your health insurance, which nobody wants. If you're in a state like Texas, if you're in a state like North Carolina, where they didn't participate in the exchange and they didn't raise the Medicaid limits, then you may not qualify for Medicaid. In most states, I would say you might get kicked off your health insurance. Start looking at Medicaid. You know, we're not traveling right now, so Medicaid works where you are, works in your state, so that's not the end of the world. If you have a concern for getting kicked off your health plan, my suggestion would be that you talk to your tax preparer about it. And if that's you, Brent, then you're gonna, I know in TurboTax, you can look at your numbers, and you can back things out if you need to. Not all of your expenses are required to be taken. It's not required to take things like a per diem, stuff like that. So if there are questionable expenses, do all your required stuff first and see where it sits you. And then make some decisions about if you need to do these extra expenses or not. You know that target number that you have for what your income needs to be. And some people are finding that their unemployment has put them out of being eligible for their insurance because they're making too much money. So now they need to add expenses back in to get their business in more of a negative to offset that unemployment amount of money. So it just depends on your circumstance on it. But I know that health insurance is a big concern for everybody. I would check with your state's requirements for Medicaid. And if you want to make the leap, call your very important doctors and make sure they accept it. If you don't care about your doctors, you're generally healthy, then it probably doesn't matter as long as you qualify. But some people have, you know, chronic concerns. They have a doctor they want to stick with. So it just depends. And again, my background with advocacy and rescue, if you want to shoot me a PM with some more specific info, we can talk some more about some advice when it comes to your health insurance too.
Thank you. Yeah, Texas is rough. You know, getting Medicaid, you know, as a married, you know, man is next to impossible. You know, married adults, period. Generally, I mean.
In your state too, yeah. Like
Really
Texas is rough. Like that's like this understatement of the year, isn't it?
Yeah, it's difficult,
especially recently. Yeah.
Thank you.
Yeah, absolutely, absolutely. Send me a PM if you want to chat some more. Okay. All right, cool. Is there anybody else who has any thoughts or questions or anything on what we've talked about so far before we change topics? Okay, everybody looks good. I'm not seeing unmutings. All right, let me jump back in. Okay, most of you are probably familiar with the changes to the 1099 miscellaneous form. We have all, if you have issued taxes or if you have gotten 1099s before you've gotten a 1099 miscellaneous, box 7 is normally where non-employee compensation has been reported. That's now gone off that form completely. We're now reporting that income for independent contractors on the 1099 NEC, which stands for non-employee compensation. So it's literally a whole form, a special form just for box 7 of the 1099 miscellaneous. I'm going to warn all of you guys right now, they're doing that because of the crackdown on 1099 versus employees. So getting a 1099 or issuing a W-2. You guys may be familiar with some of the new laws in California and some other states where they're kind of going after like Uber. And some of those people who have been issuing 1099s to independent contractors and a whole bunch of people in government and you know, different advocates groups are saying those people should be W-2'd. They should have taxes withheld. They should have workers' comp. They should have health insurance. They should have all of the things that a W-2 gets you. And that's just not the way those businesses were set up. They were set up for independent contractors. And so there's a big debate going on about it, but I can tell you right now that the reason why they have taken that income and put it on its own special little form is so they can watch it better. And make sure people are reporting it in the proper way. Next week, we're going to be doing a seminar, a webinar here again next Wednesday that's specifically for business owners. We're going to talk a lot more in depth about the definition between W-2 and 1099 and what you should be doing. So come back next week and let's get more of a deep dive into that particular conversation. But I just want to put a little seed in your heads about that 1099 NEC. I do also want to mention that while that's a new form, it still follows the same rules about the 1099 miscellaneous. And I just want to remind you that if someone works for you and earns $600 or more in one calendar year, you are required to issue them a 1099 or a W-2, whichever one fits for your business. If someone makes more than that and you are not issuing said form to them, the business owners can incur really big fines. There are late fines, and then there are what they assess as failure to file fines. There's a $50 fine per person that works for you if your reporting, your filing of a 1099 is under 30 days late. If it's more than 30 days late, it's $100 per person. Later than that is $260 per person. And an intentional failure to file is a minimum of $250 per contractor, per person, per employee, up to $550 maximum penalty. And there is no maximum for the year. So if you have 100 people that work for you, they're not going to cut it off at any point. They could fine you $550 times 100 people if they deem a failure to file. You can do 1099s for yourself. You can download them from irs.gov or get them sent to you in the mail. The new form, I know people were having a hard time finding because it was new, but eventually you'll be able to get it everywhere. I know people who get them from Staples and Office Max. You can do them by pen, you know, it doesn't matter. You can do them yourself. It's not that hard. You can mail them off to the government yourself. If you hire a tax person to do it for you, for me, I just want people to be doing this correctly. I want to see more people in our community getting paperwork to help prove their income, because here we are talking about 2020 again and people who don't have proof of income, right? So all these people who are cash under the table people, if they would have just gotten a 1099, they would have qualified for that unemployment like immediately, but they had no proof of income. So to come to me and say, oh my God, can you please like rush and do my tax return so I can get this unemployment? And yes, I put all those people at the front of the line to try and get them some proof of income. If they would have had a 1099 at bare minimum, they would have qualified right away. So it's really important as business owners that you get out there and at least do that. I want everybody to be doing it right. So I charge my clients $10 per person to do a 1099. I have some business owners who I don't even do their taxes. They just come to me every year to handle the 1099s because they want it done properly. And I can file it electronically with the IRS. Any tax preparer can file it electronically. So it's less headache for them. And I don't charge a whole lot for that service because I just want people to do it. Just do it, you know, just make it happen. So when I first started doing taxes, I swear maybe 5%, maybe 10% of people got papers. And now it's up to more like 50% or 60%. So like we're getting there, we're getting better, you know, but I really want people to pay attention to that being very important. And I will tell you also that we are seeing more people getting cracked down on that independent contractor deduction, where you say you pay these people, but then there's no 1099s to prove it. And when these audits do happen, I promise you that is ding number one that they're getting people on, is you cannot prove that you issued 1099s, so we're not going to give you that deduction. So just be very careful about that. $10 per person is nothing compared to the penalties and fees and getting a huge deduction, a $10,000 deduction taken away from you. So just don't risk it. Anybody have questions on the 1099s? I see you, Brent. Go for it.
Brent with more questions. You know, I've got a couple of small businesses, one Faire, you know, and I haven't transitioned. I mean, my rental business is I only had one season of operation. I have programs, you know, a couple of program employees that have been with me for years, and I've never 1099 them, you know, which would be appropriate for them, not W-2s. You're definitely contract, you know, hires. What's the associated costs to me besides, like, I would pay you, you know, for example, you know, $10 for, you know, 3 employees or something. I mean, that's no big cost, that's worth it. But I mean, what other associated costs would I be looking at on that
None.
benefit?
None. The benefit is the IRS doesn't steal that deduction back from you if they audit you. And also, if you don't do it and then they audit you and then they find out that you did have people working for you and you didn't issue it, then you get all those failure to file penalties and fees. It's just a snowball that you
Right.
don't want to have happen. So it's the risk of it, I think, is a huge dollar amount.
I
When-
should say, for the sake of this being recorded, hypothetically, if I had those employees.
Of course, hypothetically, right, definitely. You know, and I think for me, the way I try to explain it to people is, if you want to transition to 1099ing your people for the first time ever in your life, you have a little conversation with people, but when you're having the conversation about hiring them for a certain show, and yes, it's harder for people who've worked for you for a long time, but you have to sit down and have this conversation with them that explains to them that this is the smart way to do business, that you don't want to get in trouble with the IRS, that you do need to, you're going to collect their name, address, social security number. You're going to issue them a 1099. You are not responsible for forcing them to do their own tax return. They do not have to do that. That's not on you. But you're going to start issuing these forms. If they refuse to participate in such a thing, then you have to ask yourself if they are worth $550 of a fine. That's
So if they don't do it on their end, I could be fined.
No. If you choose not to 1099 them because they don't want you to,
Right.
then you could end up with a $550 fine. But the
Every
other
year I go through the same thing. I get the same information and tell them, this could happen. I'm letting you know that, I'm getting this information because, I plan to
I
transition.
might do a thing,
one
maybe.
day,
Right.
you know.
Right. And really at the end of the day, I think more people, especially out on the road, are getting more used to documented work. And I think that going forward, people aren't going to have much fear or pushback, because we have seen in 2020 how important getting that documentation is. So I think if you want to start it, now is the time to do that. I think more people would want it now as well. But I think that if your people have fear or issues, it's usually the fear of taxes and the fear of the IRS, and it's usually scared because they're uncertain. They're ignorant to the process. And I always tell everybody, give them my contact info. I will talk them through whether or not they need to file, what kind of expenses they may have. They don't understand that if they get this income, they now are business owners. They now have expenses they can write off, just like the rest of us. So it's really more about talking them through the things. And for you on your side, it's yes, about the possibility of fines, but I think also, to me, in my opinion, it now has become a compassionate thing to do, to give your people a form so that they
came
have
up this year, after the relief last year, and a couple employees, I didn't have, they couldn't get anything from me because I hadn't been filing on them,
Right.
so.
Right. And I had a number of employers who came to me late in March, in April. They the deadline for filing 1099s is January 31st, February 1st, whatever, of each year. And I had a lot of people come to me late and say, I didn't do this, but now I feel like this person needs it. Like, can I do it late? Absolutely, you can do it late. Just because you do it late doesn't mean the IRS is going to give you a fine, by the way. I'm not going to lie to you, knock on wood. I've never seen a client of mine be assessed a fine for filing late. Doesn't mean it won't ever happen, but I think they'd rather you just file it.
Yeah.
So at the end of the day, it's about balancing risk.
All right. Thanks.
Okay. Cool. You're welcome. Anybody else with questions on the subject? And on the flip side, those of you who work for other people ever in the world, if they pay you cash and they don't give you a form, ask them. Tell them that you would like to have a form. Ask them if they've considered doing a form and that you would like to have one. And if they don't know how to do that and they just shut you down and say, oh, I don't want to, I don't know how to do that, give them my contact information and I can talk them through the process and explain to them that it's $10 and all they have to do is give me a name, address, a social, and a grand total they made during the year, and I do the rest. It's really easy. So it's all about getting it right, Anybody else? Questions, comments? Okay, moving on through. Let's see. We talked about that one and that one. Earned income credit. That's another one that we got a cool look back on. So earned income credit is hi, I'm sorry, Adrielle, I switched off my screen. I didn't see you. Yes, you're raising.
That's okay. Just real quick, if you have an employer that is not wanting to give you a 1099, how do you handle that?
Well, first of all, you can tell them that you would like one. A lot of times the employers that come to me think that their people don't want them. And so they think they're the ones that are scared. So let your employer know the intention, first of all, that you would like to have one. Second of all, if they don't issue you a form, it is still your obligation to report that cash on your tax return.
Right.
If you get if you report the cash on your tax return, there's literally no place on a tax return where you can document who paid you that money. So a lot of times people are concerned they're going to get their employer in trouble, especially if that person is like a friend. There is nowhere you can put that information. So you can't get them in trouble. If you report that cash income, you're still going to be filing on a Schedule C, which is the same thing we all do for our businesses. Putting that cash on a Schedule C allows you to write off all the expenses, and it allows you to be self-employed, which allows you to get PUA on your unemployment and things like that. So there are all kinds of benefits to it. But if you don't get a form, don't hide that cash. You don't want to do that.
I don't.
And we all see, like in this pandemic, we've all seen too, like with unemployment, you get more per week based on the amount of money you put on your tax return. So if you're hiding your cash, you're shooting yourself in the foot. Right?
Okay.
So that's another reason. I always try and talk to my entertainers all the time about not hiding those tips, you know, and when you get later in your years and you get close to Social Security age and stuff like that, they base your Social Security on the average of the last 7 years of your income. If you're a musician and you are 60 years old and you are hiding your tips and your cash and your merch, you are literally shooting yourself in the foot in retirement. There's just no point. Go hiking, baby.
He's very excited about this.
Yes.
Okay.
She's like, I've been trying to tell them that for years. No.
Yeah.
All right, cool.
Okay. Thank
Yeah.
you. Yeah.
Awesome. Anybody else with comments or questions on that? All right, skipping on through. Earned income credit. So earned income credit is a credit that a lot of people on the road get. It's basically when your expenses can offset your income, in our circumstance at least, when your expenses can offset your income enough where you hit a certain level. And for a single person, last year that level was like $15,400 of adjusted gross income. So that's your income after all your expenses. When you hit that level and you get below that, the government's basically like, well, I don't know how you fed yourself or pay your bills, so let me give you a credit. And they give you a credit which helps offset your tax burden, or in some people's circumstances gives them a refund. So there are a lot of people in our community who, you know, traveling for a living is not cheap. There's a lot of expenses, and they end up with such a low income level that even though they've never paid into the system, they get a refund. That is because of earned income credit. The earned income tax credit now has a look back feature. So if you made a certain amount of money in 2020 and you made a different amount in 2019, yes, the software will let you choose which one basically is going to pick which year's earned income credit is going to give you more of a credit. And it's going to take that. They've never done that before. So it's going to let you use 2019 or 2020 to calculate your earned income credit. The flip side of that is, again, there are some people in our community who got more money from unemployment than they at least have documented on their taxes. Or let's not forget your 1099-G from your unemployment, you can't put any expenses against that. So it's now made it to where your adjusted gross income, because you don't have those expenses to offset it, is higher than in 2019. So some people aren't getting as much of a credit because of that. So it really depends on your circumstance. But again, if our businesses in 2020 are having a negative, it's going to help offset that AGI to where we still can hopefully get a credit like an EIC. But that's just kind of another interesting thing But some people, especially people who have kids and stuff, are definitely going to notice a difference in their tax returns, either good or not so good because of the EIC. I think in general, the look back is going to be good, I think. Okay. Child and Dependent Care Act came along with the CARES Act as well. It is going to kind of help supplement some of the exemptions that we lost in the tax changes of 2018. So we're going to get a little bit more of a credit for children in the 2020 tax return. There's also a stipulation for helping to pay for childcare. So there's now up to $3,000 credit for qualified childcare expenses. So if you guys have had documented childcare, and I try to talk to people about this all the time, even if you just have somebody in the community who's taking care of your kids and getting paid cash, like write receipts, handwritten receipts, whatever, you get a big deduction on your tax return for that. So if you have kids, start documenting your childcare, even if it's cash under the table childcare. Francis, yeah, she's asking, I'm over 65, no EIC, correct? That is correct. So if you are under 25 or over 65, you don't qualify for earned income credit. Is that stupid? Yeah, I think it is. But it's fact. So we see a lot of people who come on the road young and they don't make a whole lot of money. They're under 25 and they don't get that credit, and they're taking care of themselves. Like, they're earning their income. It's right in the title, earned income. So yeah, I think it's kind of dumb, not to mention people who are working past retirement like that. But yes, that is absolutely true. All right, we're gonna talk a little bit about unemployment now. I'm gonna say very brief things about unemployment and the PPP and the EIDL, because I'm seeing that we're kind of running a little longer in time. We're gonna talk more about this next week in the business owners seminars. So we're going to expand more on these topics. If you want to know more about it, you can come back to me next week or chat with me after this. As far as unemployment goes, my number one take home for you guys is please shout from the rooftops. Tell everybody that you know that unemployment is taxable income. Please, please, please deduct taxes from your unemployment. I'm literally opening people's files to do their tax returns, holding my breath when I see they've sent me a 1099-G, because I'm scared to death that they didn't have any withholdings from their 1099-G for unemployment. It's horrifying. People are owing money that have never owed money before. I hear all the time, like, I just thought we were going to be on unemployment for a couple months or something, then we'd be back to normal, and then I forgot. You know, and that I didn't do it till I got this 1099-G. Like, you can go into your account today and change that to where they'll start taking it out now. We don't know when this thing's going to end. So please, for the love of God, share to everybody that you know and love to make sure that they're having taxes withheld from their unemployment. People who had taxes withheld all year are getting like really pretty refunds, especially when their businesses are also in a negative. So right now, I just sent somebody, word that they're getting a $1,400 refund. This is somebody who's unemployed, and they're like turning cartwheels because they can pay their rent this month. Like, this can be a good thing. Let's make it a good thing and not a bad thing. All right. Side note, also, if you know anybody who still isn't on unemployment and kind of thought that, this would just be over like by last summer, and they still need to get on unemployment, please have them contact me, contact RCEAF. We've been helping hundreds of people get on unemployment. Every single person on this phone call qualifies for unemployment. Every single person in our community who does this for a living qualifies for unemployment. I don't care what your situation is, we all do. So if you know anybody who still doesn't think they qualify, or maybe they got stuck, or they think they got denied, they just didn't do a step right. And we can help. So let's just make sure this happens for everybody, okay? Barbara, I see that you unmuted. Did you have a question?
No.
Okay, darling, just making sure. All right. Another brief thing that we're gonna talk about a little bit more on the next call, but I wanna mention here, as shows are starting to open, I don't care if this is a 1 weekend show or 9 weeks of TRF, it is imperative that you understand, that your people understand, that your friends understand. If you are on unemployment, you continue to file your weekly claims all through a festival being open, no matter what. You can report income that you earned on those weeks. It may lessen your unemployment. It may disallow you from unemployment on that week. But on week 10, after TRF closes, on week 1, when yet another festival canceled before opening, like just happened today, if you stopped filing, you're in trouble. But if you claim your weeks and get no unemployment benefits through the run of the show, on that closing week, you go back to claiming zero income, you get full benefits again. But you have to keep filing in order to keep your claim open. So make sure that you keep doing that and letting everybody know they need to keep doing that. Throughout the pandemic, my company got the PPP, so I was paid for 8 weeks as an employee. And then I've had tax income during tax season. So I've probably claimed income on 16 weeks throughout this pandemic. I've lost or had reduced unemployment during those weeks, but then the next week I'm back to getting full unemployment. So it's super crucial to spread the word, to never, ever, ever stop filing until the moment where we are all safely feeling comfortable that we're back to doing festivals full time with no fear of cancellation. As today is proof, we are not there. So keep that claiming, okay? Anybody have quick questions on unemployment? Okay. EIDL and PPP, yes?
I'm sorry.
Yeah,
I
honey.
I wasn't quick enough on the mute.
You're fine. Go ahead.
Unmuting. Are we supposed to get something in the mail from unemployment in order to file our taxes?
Yes, every state will be issuing, yep, every state issues what's called a 1099-G. The 1099-G is where that's reported. Some states mailed them. Some states probably sent you an email, and some states didn't tell you anything. But you can go into your portal, your account online, and there should be something in reference to a 1099 or taxes or documents or something. And it will be on there for you to be able to download. But yes, everybody has a form. It basically looks like a W-2. So it's going to show if you had taxes withheld and all that sort of stuff. If you don't have one, go get it. Switching subjects, EIDL and PPP. I want to tell you guys real quick about these. If you're familiar with it, I will just say that both of those have reopened today. We actually reapplied for both of those right before this call. The PPP is one that most of us don't qualify for. That's payroll protection. That is to keep people who are W-2'd in their jobs. That's the one that my company got and paid me since we're W-2'd employees. If you apply for that one, there's what seems to be a $1,000 grant that they'll give to sole proprietors or people who don't have W-2'd employees. They don't consider 1099 independent contractors to be our employees, so they don't give us credit for that, even if we have been continuing to pay them through the pandemic. It doesn't count, but you can apply for that and get what would be a $1,000 grant. It's basically covering your own personal payroll. It's a free $1,000, so why not? We got one, my boyfriend got one for our Celtic Leatherworks business way back in like May or June or whatever it was. He just reapplied again today. He was just telling me right before this call that they already told him that he may be eligible for another $1,000. So who cares? A free $2,000. Woohoo, go for it. The new application doesn't even require you to upload anything. Like you basically self-certify, as they call it. Yes, Brent, another $1,000. That literally came in today. Eric just got the $1,000 PPP today. When did he apply, Adrielle?
We got actually a notification through Square. And so we applied through that, and it was maybe a week ago.
And you got it today?
And it was, yeah, and it was like a go ahead and fill it out through Square, and they'll send it through when it's ready. And yeah, the money was deposited today. So
amazing.
Yeah.
I mean, it's a free $1,000. It's a grant. Like,
yeah, okay.
Go get it.
Yeah.
So that's fantastic. Now, the other side of things is the EIDL. The EIDL is the one that's a loan. This EIDL, it's the economic impact, economic injury disaster loan. That's through the SBA, sba.gov. That's been there forever. You apply through the SBA for the EIDL loan, as opposed to you apply for the PPP through a lender. If you have a business bank account, you want to go through that person. If you don't, like you use a personal account, even if it's a separate account from your personal, but it's a personal account, not a business account, most banks aren't letting you use that. But if you have a Square or PayPal, they're specifically set up for independent contractors and small business owners and sole props to apply through them. So try going through them. And Brent was just saying, a lot of people have been using Lendio because Lendio, you put in kind of your general information and they'll match you up with like a lender that suits your situation. So Lendio is a cool one to do. The EIDL loan has been around forever. It's going to be around long after this pandemic. It is a 3.75% small business loan that is paid back over 30 years. I don't know if it was like this before the pandemic, but right now there's no payment due within the first year. And it's not compounded interest. So we got it from Celtic Leatherworks, got a sizable loan. And we're allowed to use it for anything we write off on our Schedule C, which is everything. So woohoo. We've been able to use that to get our business online during this. We've been doing well with our auction group that we started online. So we've been able to pay our people to start doing production again, which I never thought would have to happen during the pandemic. So it's been a nice lifeline to our business. And they told us on day one, if we approve you, you're going to get this amount. 1 year from now on this date, you're going to owe $71 a month for the next 30 years. And you can pay it down earlier without any penalty or anything. $71 for like a $15,000 loan that like saved our asses during the pandemic. Like, okay, yes, please sign me up. That is a loan. A lot of people are scared of that, but I feel confident that eventually our businesses are going to start making money again. So I'm okay with that. So I chose to take that. The other thing that opened today in reference to the EIDL is the advance or the grant portion of the EIDL was something that was announced that's existed in the very beginning, but real quick, everybody applied, and then that grant advance portion dried up and went away. So even though we applied for it, we didn't get it. I don't know very many people who got that grant advance portion of the EIDL. That reopened today. So that's again, SBA.gov. Anybody who has a Schedule C, so any business owner, any independent contractor, if you have 1099s or earn cash, you do your taxes on a Schedule C, you are eligible for that. Hey, Brent, yes.
I thought that $1,000 was from the EIDL back in June.
That's PPP. Now the EIDL had a grant portion too, so not knowing what you actually got, I can't really clarify which one you have.
Well, I mean, I got the EIDL loan.
Yes.
I got 1,000. Okay, but that was from PPP.
Most people, yes. We got both. We got $1,000 grant from the PPP, and then we got a $14,500 loan from the EIDL. We did not get the grant portion of the EIDL. That money dried up real quickly. And today it's back open through SBA.gov. So we reapplied for that again today. We'll see.
Well,
That one is supposed to be up to $10,000. Up to. If anybody applies for those things and gets those things, let me know. This is like starting over again. Like we're all trying to collect this information to find out like, I did this and this happened and I got this. When did you apply? When did you get your money? You know, it's like starting this whole thing again, like it's back in, you know, April, and we're all trying to figure this crap out. So anyway, look into those things because I don't know about you, but I'm all about free money. So let's go. Let's try it. Worst they can do is deny you, right? Okay. Can we apply for the PPP during the second round if we did not take the first round last year? Absolutely. If you do a second round when you didn't get the first round, you have to prove that in any quarter of 2020, your business was down 25% in sales. I think we all have a quarter of 2020. We could compare that to the same quarter in 2019 and prove that. I want to say that's that quarter of April, May, and June before we all figured out how to get our crap online, right? So I think that we can all meet that assessment. So you can absolutely do that. Yeah, I like money too. Who said that? Square turned you down. When was that, Brent? Last time?
No, I didn't apply for it back in March, but when I first kind of ran into you on the booth owners page, you know, and Lendio came up, and I applied for Lendio and Blue Vine and Square because I use Square, you know, for my business. I thought, well, they'd be perfect. They've got all the records they need. You know, my money goes through them.
Yeah.
But they turned me down.
That was back in the summer.
No, that was when the second round of PPP was announced in end of January, something like that.
Okay.
A little over a month ago.
After this, send me some details about like why they said they turned you down, and let's see what we can think about to move forward with it.
Said my business was too small. Yeah, I can send you that.
I think I saw you commenting on that.
Yeah, how am I too small? What? That's
think
it.
it's
For
bullshit.
small business.
Yeah, but also this new round of stuff is specifically for sole props and people with less than 12 employees. So this round and underserved communities. And so I think in this round we may get more exception for this. So it may be worth trying again. But yeah, let's see if we can help you move forward with that.
Thank you. I appreciate it. I will.
Yeah, of course. I got the grant from the EIDL last year. Should I apply again? Sure. Why not? Go for it. There doesn't seem to be a lot of rules surrounding this newest thing yet. It's a lot of question marks. So I feel like when there's a question mark and there's a possibility, let's go. Let's try it. Let's do it. Report back to us and let us know how it's working for you. Miranda has her hand up. Yes.
Howdy, Brande. I usually work the Arizona Renaissance Festival, and both 2019 and 2020 were no exception. Thankfully, I do have a 1099 from Arizona 2019. So it should be pretty easy to show. Like 2020, I had at least one quarter, but my like situations changed where I've kind of written off this coming year. Like my only festival I expect to do this year is TRF. So obviously Arizona didn't happen this year. That's the only quarter that I really have to match with. Would you still say it's worth going for the EIDL, or is it just not available to me because that like I only have independent contracting in one quarter that I can really go back on?
Okay, so when you do these applications, they're going to talk to you about, like when he just did the EIDL one just now today, they were actually comparing month to month your income in 2019 versus your income in that month in 2020, January to January, February to February, stuff like that. When you're a small business owner, when you're an independent contractor, there's nothing that shows when you earn that money, quite frankly. So if you earn that money in 2019 in the beginning and at the end of the year, and then the beginning of 2020 didn't happen, you're already showing that quarter to quarter loss. So don't forget, we're talking about 2019 versus 2020, not 2021.
Okay, and then since I found me as separating myself between two different tax entities here, me as a business was only working TRF in Arizona. Me as an individual was also working on W-2 income. Does that change anything, or is it me as a business is what EIDL is looking at, and they don't care about my fast food job?
They don't care about your W-2 income because that doesn't make you qualified as a business. They care about your 1099 cash and business income.
Awesome, thank you.
You're welcome. Okay, anybody else with questions on this? Again, next week, we're going to talk a lot more in depth about these programs. And I think a week from now, we're going to know more about our circumstances. Those of us who've just applied today may have some information back and stuff like that. So I think we'll have a lot more to be able to discuss with knowledge instead of guesswork next week. Anybody with questions right now on EIDL, PPP, unemployment? Pause for people looking for mute buttons. Okay. Last little bit that I want to tell you right now is replacement. There's another thing that they passed, which is an employee retention tax credit. That's again for W-2 people. So I'm not going to address that today. We'll talk more about it next time. But if you do W-2 your employees, we can talk about that separately too if you would like to. Recovery rebate credit. This is one we really need to talk about this time. If you did not get, or you know people who did not get both stimuluses, so we've had two, the $1,200 one that you probably got somewhere in May or June, and then the $600 one that you probably got somewhere right around the first of the year, probably January 2021. That's for a single person. If you're a married person, you have children, you probably got more, but that's for the single person. If you did not get those, the IRS has said that those have all been sent out. If you don't have them by now, it's not coming. You can check your status at Get My Payment. If you just Google Get My Payment, it'll tell you if it said that they mailed it out to you, if it still says like pending, or your info doesn't match. Your info doesn't match doesn't necessarily mean your info doesn't match. It means that they don't have anything to tell you. Like, it's just kind of dumb. But if you did not get those things, you can now claim them on your 2020 tax return as a credit. Now, this is a dollar for dollar credit that turns into a refund. So if you got the first one, but you didn't get the second one, you're going to tell your tax preparer. If you do it yourself, it's going to ask you. They literally won't let us file without answering that question. If you didn't get it, you're going to say what you didn't get, and then they're going to give you that credit as a refund right on your tax return. If you owe taxes, it's going to offset what you owe. So that's super important. And if people think they're still waiting around for like a stimulus check to come, it's not coming. Unless it's at your mom's house and she hasn't opened her mail yet or something like that. Your mail forwarding hasn't shown up in 4 months. Like, it's not coming. So take it as a credit on your tax return. It's super important. This next one with this new bill that's coming out, supposed to have another $1,400 stimulus. Again, we'll see what passes when it passes, but there's not going to be a credit for that on your 2020 tax return. There's no way to do that. Like, we've already started filing taxes. So that one is either going to be a direct deposit, get it in the mail kind of thing, or it's going to end up being claimed on your 2021 taxes. Nobody wants to wait that long for it. So make sure that you go into that Get My Payment portal at the IRS. You can actually update your mailing address in there. So especially if you have changed your addresses, make sure that the IRS has your correct address on file, or your stimulus checks are going to some fictitious address no one lives at anymore, or the new people who you may not know and may not be generous enough to send you your stimulus check. Anybody have questions on that one? Miranda, I see your hand is still raised. Is that from before? If so, just declick it. I didn't realize you had to declick it either. So, all right, perfect, cool. Real quick, rent assistance. Every single state got given rent assistance money in this last bill. You have to have one person in your household that's on unemployment, or you have to prove 80% or more that your income was down by 20% essentially over last year. So make sure that you look into that. You can actually, the Arizona unemployment website had a link straight to it, and you can apply through your county. But if you just Google your state name with how to apply for rental assistance, it can provide up to 12 months of rent and utility assistance from this new bill. So that's really kind of cool. If you pay rent or have utilities someplace, check into that. And then meals deduction. So this is like a look forward in something that doesn't start until 2021, which, by the way, is what we're on right now. They have now changed a thing. So I've been a big proponent of per diem. If you know me and I do your taxes for ages and ages and ages. Per diem is a daily allotment of money that you get for travel, for work if you're traveling away from home. If you're more than 50 miles away from home, you get up to minimum of $55 per day for a food allowance, basically, while you're traveling for work. But that's only 50% deductible, okay? It's still a massive deduction for most of us on the road. And so I always want people to take it. But the new tax law changed it for 2021 and 2022. So we're talking about what we're on now, not the taxes we're currently doing for 2020. But in 2021 and 2022, meals are now back to 100% deductible. This is going to be one of those things you're now saving receipts for again. So something to consider on that. But what they consider meals is they're talking about prepared foods. So because the restaurant business has had such a decline with the pandemic, this is trying to be a boost to the restaurant business, okay? So they're considering if you eat in a restaurant, if you get takeout, if you get delivery, that's like I'm living off DoorDash, right? If you get anything that's prepared foods, that's then brought to you, that you've eaten in, someone else has prepared for you, as opposed to you had Instacart bring you all the stuff to make a sandwich and you made it yourself. That doesn't count. If you have a prepared food situation for business purposes, that is now 100% deductible in 2021 and 2022. That's huge. That's insane. That counts for Drinks. I don't think most of us are out there like having drinks with friends, having drinks for a business meeting. But if you do end up out there doing stuff for business, it can be with your employee, it can be with your clients, it can be with a coworker, a spouse who's also in the same business. If you're, again, talking about business while you're out there, which is the prerequisite, that's now 100% deductible. Keep those receipts. We're going to compare those to per diem, and we're going to see how that offsets. If we wind up with a year where we're not doing a whole lot of festivals and we can't get that per diem deduction, you moved your business into your RV for the year because you can't go anywhere else, and you're getting delivery brought into you so you don't have to stop working in order to stop and make food because you're a workaholic and you got stuff to do. It's all 100% deductible now. So let's keep track of per diem and actual meal expenses. Let's not forget, entertainment is not deductible at all. So if you end up going to a baseball game, those tickets are not deductible. But if you talk with business about business during the game and you get food and drinks, that portion is deductible. Is that a scenario for right now? No, but just keep that in mind because in 2022, it very well may be. Louis says, you're calling me out. Buying Faire lunch or buying lunch at Faire for my crew. Yes. If you like this, you know, when I go do my seminars on site and I get water, I get bananas for people, like whatever, like I can deduct that 100%. Absolutely. Getting ice and water on the weekends for your crew so they don't die. All of that stuff is 100% deductible now. So woohoo. Adrielle, did I answer your question? Because I see you put your hand down. Okay, good. So that's a big thing going forward in 2021. Does anybody have any questions on any of those things I just rapid fired through? Okay. The last thing that I want to mention to you is don't forget that there's an app for everything. The most important thing that I can mention to you guys, which may not seem important for the times when we're just sitting in our houses, the best thing that you can do is get yourself an app on your phone that is both a mile tracker and a receipt keeper. There are a number of apps that do it all in one. If you're a QuickBooks person, QuickBooks Self-Employed does this, and it also interacts with all of their other QuickBooks programs. It's like $12 a month. You can also get one called Receipt Bank, which is $14 about a month. There's a couple free ones like Everlance and Stride. A lot of people I know like Stride. It's free, and I'll tell you, it tracks your miles, and you can tell it if this particular trip was business or if it was personal. At the end of the year, it's going to give you a PDF that shows you all your miles, your grand total. When or your tax preparer asks you for your odometer reading and your grand total of miles traveled and what was business and what was personal, it's going to tell you all that. Oh, yeah. Oh, good. Yeah, she loves Everlance very much. That's awesome. If you have paper receipts, it's going to let you take a picture of that paper receipt right there, and then it's going to ask you how you want to categorize it, and it's going to throw it right into the expense category that you tell it to put it in. If you have a digital receipt, a lot of these are going to allow you to import digital receipts from your email, from Amazon, from PayPal, from Square, from anything, and you can categorize it right there. And again, at the end of the year, it's going to give you a breakdown. And if it doesn't fit into a category that they have, they'll let you write your own category. So you can write in booth fees. You know, not everybody has that, so it's not built into the app. So you can create your own category. And then from there, you can just drop these receipts right in there. I'm a big fan of these digital receipt things because we all know that, let's be frank, shit happens. We lose receipts, car burnt down, car got stolen, and that's where I keep all my receipts, like whatever the deal is. In this way, you always have a digital backup. 5 years from now, 3 years from now, if you get audited on some year, and you have all of your receipts, good, right? Brent showing his receipt keeper. If you get audited, now you have digital copies. If you get audited, they ask you to give them copies of your receipts. They don't know if you went to Kinko's and made photocopies of all your paper receipts. It's all going to come out all together as a photocopy. So if you have a digital copy and you can just say print, like it's half the battle. I've been audited, by the way, multiple times. I've helped people through multiple audits. When you send them 187 pages of photographed receipts, they're like, back away, you're fine, stop it. You know, so as long as you keep receipts are king. Don't forget that. Business statements, your bank statements only show where you purchased. They don't show what you purchased. If you get audited, you need an itemized receipt showing what you purchased. A bank statement is a backup. It's not king. Receipts are king. Just get yourself an app and get ready for moving into 2021 and some of these other things that now's a real good time to reset. If you haven't been doing things quite the way you should be and you know it, 2020 is a great way to, did I call a bunch of you out? 2020 is a great time to start. We had very little income in 2020. We had very little people we were paying. We had very little to keep track of. So like start with 2020 and get right. Then when we get back into years where we're having full income, full expenses again, because again, like I believe they're coming. When we do, we'll be set up the right way. So start now. And I do want to let you guys know next week, this is what I want to show you here. Next week, this is what we're going to be talking about next week. So there's going to be a whole lot more expanding on what we've talked about and a lot more specific about certain expenses, assets, things like that. We're going to go into a lot more about loans and grants and things like that. So that's what's coming in week 2. Again, that's a week from today. Replays are always going to be on Saturday. And then the next one is going to be this one here, sharing. I'm sorry, week 3 is specifically for business owners. What did I just share? That's specifically for business owners on week 3. It's like I didn't even read my own slides. Hold, please. Week 2 is this one. Oh, self-employed independent contractors and cash earners. I could read my own slide, like that's fine. Don't forget that most of us fall into all of those categories. So we're gonna go through those same things, a lot of the same things week 2 and week 3, but specifically business owners on week 3, I wanna talk to you guys specifically about some things that independent contractors may not necessarily be involved in, specifically things like sales tax versus income tax, loans and grants and different things like that, how to track sales in multiple states, earning income while on unemployment, like all kinds of different things like that. So week 3 is more specifically geared toward business owners, but week 2 is going to be especially for people who all file, anybody who files on the Schedule C. And then week 4, we're going to come into, week 4 should be pretty fun. On week 4, we're going to, we realized that week was going to be St. Patty's Day. So we decided to do a tax basics day and a drinking game edition on St. Patty's Day. Because if you don't know a whole heck of a lot about taxes, the basics can be pretty overwhelming and scary and stupid. And so we figured we would just drink through it. And we're going to have some breaks for some Irish music. We're going to have an intermission for an Irish jig. So we can, if you don't Irish jig, if you're scared you're going to turn your ankle and have to go to the emergency room like me, then you can just like cheers during it. And so anyway, we're going to do tax basics on week 4. So if you know any people, I implore you, who do not do their taxes, who have never done their taxes, who are super behind, who are scared of things, please, please, please ask them to come to week 4. Ask them to come listen to this seminar. I hope that people who come to these seminars can understand, you know, that it doesn't have to be this scary. I hope that all of us kind of getting together and talking about these things helps people understand that it doesn't have to be that frightening. So please encourage your friends who don't do the things to come to that week. We'll be sharing these events all over the place, so you'll be able to see them, tag people in. I'm just call them right out, like tag them in the event and just say, hey, I think you should go to this thing. Brandy's all right. She's not scary at all, you know? And then hopefully we can, you know, get this information out to everybody. And if anybody missed tonight and you think they might be interested, share the link with them, let them come and watch the rebroadcast on Saturday. And if you guys have any more questions for me, I'm going to open the floor right now for any last minute questions. Hey, Lindsay. Yes, ma'am.
There we
no,
go.
there you go.
Found the mute button. Sorry. So I wanted to ask now my super specific question about the disaster relief. Now that I have you, I was going to email this to you, but just went, since I'm going to this anyway, I'll ask. So for a lot of stuff, we did get insurance reimbursement. Of course, none of our costumes, none of our outfits, none of our Faire stuff. So I'm going to be sending information on all of that, but I can only get approximates for pricing on that.
I think that's like insurance basics. Like a lot of times you can only get it approximates on things anyway. So
Yeah.
that's just life. And if they had
Yeah.
things they didn't reimburse you for, then that's exactly what this casualty loss look back is about.
Well, what I wanted to ask though was because the things that they did reimburse us for, they devalued. And so it's not the replacement cost, it's whatever they feel that the valuation of it was. So we got basically in total, we got half of the policy that we have been paying on. Now, can we then ask for the difference between the replacement cost and what we actually got paid by insurance? Or does the IRS just count that as being reimbursed?
Send me an email and let me look into that. I don't want to give you the wrong answer because that just changed. So let me do a little more research on that.
Okay, that would be awesome because I just want to make sure that we get the maximum dollar. If we're going back and revamping 2019, which was a shitty year for me, I would really like to maximize my dollar.
Yeah, I agree. When I saw that deduction, I thought of you specifically. So yeah, send me an email. Let me do some research. Cool. Anybody else with questions?
I just want to say, Lindsay, I had a fire loss end of 2018. Our house burned down, and I was able, we had, you call it what it is, we had to really pad, to get reimbursements from our insurance company. For instance, on costuming, 30 years of costuming. I mean, some of it's new, some of it's not. And, I just went to some of the costumes Faire, and said, can you just give me,
Some receipts. Yeah.
receipts, and they were happy to do it.
Well, I'm going to talk to some of our friends who are costume makers out here in what they would charge and get receipts from them. And I'm getting receipts too from people who, like shops that I had bought stuff from. I'm getting receipts from them on stuff that we weren't able to have replaced either. Another question very quickly, Brande. Because the bulk of the personal property payout was actually 2020. So we may not have to go back and revamp 2019 if the payout was in 2020, correct?
Yeah, that's a good point for that as well. Because obviously you don't need to look back for that.
No.
So the old casualty loss rules should still be in place for that. So yeah, it may not be about doing an amendment for you.
It may just be about doing, because we got the payout and it's going to count as income for this year. We got the payout for our personal property loss. So maybe we could just use it at that point. I'll send you an email on it.
Yeah, bring up all those points and let me go do some investigation on the new tax law. Cool. Okay, anybody else with questions? All right, cool. If you find more questions between now and next week, if you come back in again to these seminars, I want to tell everybody you can pre-submit questions. So if you go into the event for week 2, week 3, wherever you're going to come, you can see the syllabus or the outline of what we're going to talk about. If you don't see a topic you want to have discussed that you think fits in that, go into the event over at Life's a Faire. It'll be copied over at RCEAF. So wherever, click on the link. And then in the discussion, you can pre-submit a topic or a specific question. That'll give me some time to research ahead of time if I don't know the answer, especially if it's a new tax law, and I can get that information for you. So if you think of new questions between now and then, go into the comments and pre-submit them so we can make sure we discuss them on the next call. Okay, anybody else before we head out?
Just your email one more time, if I could.
Yeah, it's Brande, BRANDES, Watson @gmail. If you ever have quick things that you need to get to me, PM on Facebook, because I basically live there now, is the fastest way to get to me. A text message would be the next fastest way to get to me, and an email will be the things that I answer at about midnight when the rest of you are asleep, because I'm a night owl. And then when you wake up at a normal person's hour the next day, you'll have a response. But if you need me ASAP, PM me or text me is always the best way to go.
Thanks for everything today.
Thank you guys. Guys, thanks for being here. I love that you want to learn, and I applaud you all for always wanting to take on these challenges and know more stuff, because knowing more stuff is important. Again, if you have specific questions, come back to me after this, and maybe we'll see some of you next week. Invite your friends, anybody who needs to know stuff, make them come. All right, you guys, thanks for coming. Have a good night. Enjoy yourselves. Pat yourselves on the back for being good little learners. All of you Ravenclaws.
Bye.